Hey guys, Mike here. So, oh boy, what a day in the market. I mean, you want to talk about some volatile swings? Oh my goodness. And it was all about rate sensitive stocks once again. If you didn't see it, I'll show you exactly what happened to cause that. But the intraday swings were just absolutely insane today. And, but we'll go over that for sure. We're also going to focus on right at the beginning here about, what gives me pause, what should give you pause, and just a moment to kind of reassess things, because when this kind of data comes out, you have to say, okay, hold on a second, let me just figure out what my plan is here and what exactly is happening going forward. And whether you're a long-term investor, trader, whatever it is, this is the kind of data you want to look at, because you could have opportunities coming up here for sure based on this data. And again, I'm going to go into, I like to keep these videos 15 minutes or shorter, so I got data. I'm going to go over the housing market here coming up in the next couple of days for sure. I'm saying a bunch of BS about that. And then the other one's going to be really what you're seeing in financial conditions as far as the liquidity, things of that nature as well. And if you're a member, you already got all that stuff, so don't sweat it. Now, to start off, what happened and what caused the rally? Literally, like the IWM was almost up 2% even before you opened the market. It was the fact that you had Fed presidents out there speaking, right? And all of a sudden, they're like, hey, they're hinting at rate pauses, right? Which, of course, leads to rate cuts. And so you had Fed Governor Christopher out there said that there's no reason to insist rates stay really high if inflation continues to cool. So, of course, the market was like, yay. And then you had Chicago Fed President Goolsbee voicing concerns about keeping rates too high for too long. So, of course, Treasury yields and the dollar hit multi-month lows this morning after a U.S. Federal Reserve official made fresh hints of interest rate cuts while stocks gained ground on hopes of easing inflation, right? And so, of course, you can read the rest of that for yourself, but this is why you saw yields drop. And, of course, rate-sensitive stocks, which I'll show you what I'm talking about, absolutely went crazy when that happened, right? Now, I will go over this really quickly. This is the Fed beige book coming out at 2 o'clock. And what it showed was, obviously, the economy is slowing. And this is, when the federal banks get together with all their data. And it shows, economic activity slowed since the previous report, with 4 districts reporting modest growth, 2 indicating conditions were flat to slightly down, and 6 noting slight decline in activity, as well as the economic outlook, which now shows over the next 6 to 12 months diminishing over the reporting period, which, I mean, no shocker. If you hold rates high, that's what's going to happen. We kind of see that, right? We're hearing from Walmart, Target, and all these other big retailers for sure. And I'm going to go ahead and jump ahead, because one thing that will affect the market and the yields tomorrow is going to be all this data coming out pre-market, right? Continuous jobless claims, initial jobless claims. You'll have core PCE and then regular PCE month over month, year over year, personal income month over month, and more importantly, personal spending month over month. You're also going to have Fed President speaking, but then you'll have Chicago PMI coming out as well. And then a lot of home data. I don't think the 4-week and 8-week pill option should be a problem. Of course, I didn't think a 7-year one would be either, but it kind of ended up being. Now, that leads me into the data that makes me take pause, at least for the next week or two, and I'm looking at this. But also, if you're a long-term investor, you can look at this and say, I might get some opportunities here, right, to come into some of my favorite stocks. And what am I talking about? Remember, I think I just did, I did do a members video on this, about talking about there's 3 things to me that drive markets. Long-term, short-term, no matter what time frame you're looking at. But, you're talking about liquidity, you're talking about market sentiment, and breadth, okay? And when you start seeing stuff like this, and I showed you this before this rally, how low this was. Now, all of a sudden, you got NAIM exposure, right? These are the active managers who are coming in. Now, all of a sudden, it's back to 79. It was way down the toilet before this. When you look at this, when you start to get usually up to a certain level, I don't know if we're there yet. I want to see it a little bit higher, but you see how fast it moved? Like, people started just buying stocks. These active investors, or active managers, I should say, started buying stocks, like hotcakes. And when you get up to a certain point, then you're going to start to see a major pullback, right? But now we're just at that point where you might get to see a slight pullback. What else are you seeing? Remember this one, CTA positioning in U.S. equities? These are the commodity folks. I mean, look at that right there. I mean, it goes all the way back to 2014, this spike. That's a huge, huge shift, right, in what they're doing. So they've been buying like crazy. Now you're seeing where you see these gaps, these huge thrusts in the market, right, coming from these two. Not just them, though. What else do you got? NASDAQ 100 net long futures contracts. Ain't never seen nothing like it before. Look at that. Asset managers and the funds right here. Look at that. Bam. I mean, those two spikes up are just unbelievable. But this is why you're seeing them. You're sitting there going, oh, man, this thing just keeps going up. Or look at the thrust and how fast it went up because all this money came in, right? What else are you seeing? B of A's reporting today. Buybacks by corporate clients accelerated last week. See the big old spike right there? That's not much you're going to have. You got a lot of stock buybacks for corporations as well. Because remember, they got to get rid of that money, and they're going to want their year-end bonuses. So they're going to be buying. They've been buying like crazy, I'm sure already. Then, forget just the stocks. How about the bonds, right? So J.P. Morgan reported today that their Treasury client survey shows speculative investors most long in history. And you can see the 10-year Treasury yield right there, but you see the spike, right? I mean, they're absolutely loading the boat on this stuff. And so, what's the most concerning when you see this happen, this is when you really got to go, uh-oh. And guys, before we continue, if you're getting anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. And that's when the bears disappear. This is the AAII U.S. Investor Sentiment Bearish Readings. And you can see where it's at, right? Way down the floor down there. You saw where it was before we started making this move up. And so they're starting to kind of disappear. And I always say when they start to capitulate, it doesn't mean we can't keep moving up, but just kind of starting to go, boy, everybody's getting on the same train here. And this is when you want to start listening for elevator talk, water cooler talk, sitting around holiday dinners. If you hear Uncle Jimmy, who ain't never talked about a stock in his life, saying, hey, you get on that Christmas rally? You preparing for that? Like you start talking about stocks and investments. That's when you're like, whoa, wait a minute. When grandma starts talking about it, people in the elevator who you've never heard talk about it. That's when you just have to say, okay, let me see what's going on here, right? So, and we don't know, again, this could continue to push, right? Because those aren't extreme readings like we've seen in the past, right? But they're getting there very quickly. You saw how fast they moved up. If you watched my video when I showed you originally, I think it was like October 26th, 7th, 8th, whatever it was, those readings. And so everybody and their mother is trying to position for this Santa rally. The question is, like you saw the tomfoolery this morning in the market where it pushed up way high and then dropped like a rock. Are you going to start seeing that in the beginning of December where we just kind of consolidate, really get choppy, or come down a little bit for everybody to load up for that year-end push? Okay, that's what we got to look for. And I say everybody, I mean like big money, not us. Okay, so that's just something I always look at that stuff because it's like, oof. If you're in shares is one thing. If you're in options is a whole nother, right? Because if it's a chop fest, that's going to be tough. If you're in shares, you can just wait it out. But I was also saying for long-term investors, if you're looking at it, you're kind of hoping it keeps going up because it's a contrarian indicator, right? That's how that works. And so when sentiment gets way too over bullish, I don't care what time of the year it is, you'll usually get some kind of pullback, right? So maybe you do have a 2021 because we hadn't had a Christmas rally, a real true good December. Didn't have it in 2021, didn't have it in 2022. Maybe this year maybe we do just get a straight up, move or whatever. But you can see what's happening now. You're seeing consolidation. Right? You're seeing these crazy moves off any kind of news on yields or whatever, but then it sells back off. And we're sitting right at these levels where it's like, remember 4,600 to me is like key for the S&P right now. And it got so close. It was like 0.23% away this morning from hitting that. But you got a lot of stocks. They're just sitting on like these double top formations, major resistance. Have had just massive run-ups. And so you're just wondering when is going to be some massive profit taken to gear up for the year-end move. So, just want to make you aware of it. Let me know what you think down in the comments and stuff. And if you have a contrarian indicator you like to use. Now, speaking of rate-sensitive stuff, right? And you saw this, and we've had how many of these now in the last, 4 weeks? When you get anything that seems dovish or whatever, financials taking off, especially regional banks, real estate, loving it right there, right? And PSCT, that's a small cap tech because the large cap tech, it was okay, but if we scroll down, you'll even see right there, there's the Magnificent Seven. Not a great day for them. You could see again, like money just like rotating out of them going into this smaller stuff, right? And you see utilities down at the bottom, which normally they've been doing good on rate sensitive stuff, and then XLP, but those are defensive, right? And so, are people planning on going defensive? Probably not, not at all. But at least not right now. So I think that's why you see them down. And then, when you come over here and you just look at IWM, small caps, very rate sensitive. Great day today until it hit what? This is what we talked about, the 200 and the 100. That is a brick freaking wall. This is the ugliest inverse head and shoulders, but TradeView says it is one. So, I figured I'd at least show it to you anyway. right? Still staying above that trend line right there, still in that volume gap. That right there, 185 will be a beast as well. But if it does bust through the 100 and the 200 right there, then yeah, I think it'll hit 185 pretty quickly, and then that'll be another brick wall for it before you see a little more selling off and stuff. But again, still got to get above that 200. That's really all that matters right now for small caps at this point in time. Now, DPST, this is a 3x leverage ETF on regional banks. All right, it moves in gaps. When it moves, right? You got the breakout, the pop up, now the gap up. Huge day today. At one point in time, I think it was up like 12% or some crazy mess. And again, that 69.92, that's going to be the next level of resistance if this continues to move up for sure. There's no doubt about it. And if we just kind of move out, I mean, you can see why. But when you look at, RSI, MACD, all of that looks good right now. But this is a very, very damaged chart. I mean, this was clobbered, right? And you see that right there? Absolutely clobbered. And so you can see that 69 area I was talking about, that's like the 2020 lows and stuff on this thing. And so just keep that in mind. Another level to look at, if it does get past that, which I assume it'll take a minute, right around like probably 93 would be your next level right there. And so, remember, this is a 3x leverage ETF. That's why it can move to those levels. I'm just showing you that because you can see the moves better. And I think it's KRE, if I'm not mistaken. It's not the leverage one. Now, CrowdStrike, I'm going to point this one out because obviously this had an effect on a lot of stocks, as I'll show you. But reported earnings kind of flat and all of a sudden exploded today, right? And this has just such a huge move up already. And you want to talk about a V-shaped recovery, or whatever you want to call it, Nike checkmark recovery right now, but I think it's going to end up being just a total V-shaped recovery. That's what that is. I mean, there was no rounding bottom to this one at all. It just came down at around 85 and just absolutely skyrocketed. Congrats to those who are in the stock or own it and everything. I think it was up 10, 12% or some crazy mess today. And so, Wall Street, like what they had to hear, I thought they had good earnings. That's why I was surprised with the reaction. I guess they were just killing premiums on the earnings part, but and delaying it. But when you look at the moving averages, I mean, all of them are pointing up. Everything looks healthy on this one right here for sure. And then when you go to the volume profile, I mean, you can see it's in a volume gap right there. So this continue to move up to that next level, which looks like, I think that's January or February highs right there around 241, if I'm not mistaken. So, once you get there, we'll see where it heads from there. But, you can see right here, it pulled up all these other stocks. You got Snow reporting, I believe, after the bell today. And so, but all these just, and of course, Datadog's been on a tear. So you probably should have known Crowd was going to do well because Datadog absolutely roared after earnings. We'll see if Snow does as well. But people are loving cybersecurity and software stocks right now. Now, Tesla, what we talked about, that trend line right there, okay? Going to the 15-minute on this one right here. You can see it got above it. Now, why did it stop right here? This is key, okay? That little shaded area, those are fair value gaps. I just put this on the 1 hour for you. I'm sure you can put it on a daily and pull up just one total. But right when it mitigated them, boom, started selling back down. I don't think it's a shock either. That long-term, downward trend line's been there for a while. Was a problem. And you see it just kind of sold off all day long, setting the prior day high as support and resistance and coming down the prior week. And so, again, no surprise here at all for Tesla because what's going on tomorrow, right? And I'm kind of surprised in a way because usually they'll run this up all the way into some kind of big event, but this time they didn't. I'm going to go ahead and put a trend line right here. And tomorrow is the Cybertruck deal. I've heard they're giving away trucks or letting people buy them for whatever price, and we'll see what happens. I think the price is the big thing. What price are they going to come out with, and whatever else they're going to do. Usually these are sell the news events, but again, if some craziness comes out, then yeah, you can see this pop or whatever. But looking at this one right here, obviously, if we break down through here, you can see that 241 is going to be support for it at first, breaks down through that. Then we're going back to 233, and we know how Tesla moves. So again, we'll watch for call or put options flowing through and stuff. Now, AMD got above that trend line I talked about for the longest time, right? Going back to all-time highs right there. We're going to see if it can bring it and set that as support now. Once it got up in that supply area, we talked about this the other day. Kind of knew it was going to sell off. That's what happened. That's normal. This has been a tough area for it to get through, and it's had a gigantic move. So we're going to see if it's going to take a break, and consolidate along that line, or either break back down through it and come down to maybe like 121 right there, which would be nice support for it. And you can see the RSI is what it's doing. It's just consolidating right there, right around that overbought area right there. But you can see all your tree branches, those right there on the volume profile, VRVP if you're in TradeView. Will give you a support resistance pretty much. Now, Square, of course, continue to move up today. sitting there hitting, some pretty major resistance right there. It's just had a crazy run, super overbought. MACD is stretched to the hilt. But again, this one's, I don't think this is attached to BTC yet. I keep looking at that. Bitcoin, I don't think it is, because when Bitcoin sells off, the Square has not been selling off. But it is, most importantly, what I want to talk about is above this long-term trend line right here, which was the 2020 low and stuff. It is back above that, so that is a really positive sign for this. For long term, would you like to see it? I mean, I'd like to see it consolidate some, start building out some support, because right now it don't have any of that. It's just roaring up. And so let's see, because fintech obviously has been hot. Let's see if it can consolidate along that long-term trend line right there. That's what I would like to see if you're looking for more of a long-term move. But again, I mean, when you look at it, it's still sitting here. I'm actually going to put this in here as another trend line, which is pretty high up. But that's 3 touches already. See what happens when it hits that. It's still technically just really in stage 1. Still hadn't hit stage 2 or anything else when you look at it. Now, looking at earnings, you're going to have Kroger, Academy, Big Lots, a lot of retailers, TD Bank. Marvel is another semiconductor. Then you have Ulta Beauty, and then UiPath, and then Dell. And so nothing's going to move markets or anything. Again, some of these are staples, and then like Academy is not. You don't need sports stuff, but let's hear and at least see what they got to say. And then Ulta Beauty, I think that's another high flyer. So those stocks have been doing really well, if I can remember correctly. But anyway, I mean, the economic data is going to be the big one starting off in the morning for sure. That will absolutely shift markets one way or the other. Let me know what you think down in the comments and stuff. Hope you got something out of it, guys. Appreciate all you guys who watch. Please hit that like and subscribe button. Think about sharing the video, and I will see you tomorrow.